All right. One thing that I skipped over in Learning Objective 3 for Chapter 1 was on page 6. That has to do with the standard deduction and the exemptions. And then I wanted to point this out because this is where one of those big changes is for 2018. Does not take effect until 2018. So our tax returns that we do for 2017 are going to use the information that is in your textbook. So the standard deductions are listed, it's the second half of page 6. And if you're single, we already talked about our filing statuses. If you're single, your standard deduction is $6,350. So if you are trying to determine if you should use the standard deduction or itemized deductions, add up all of your itemized deductions, which we'll talk about when we get to Chapter 5. If they're more than $6,350, you should itemize. If they're less than $6,350, then you just use the standard deduction. So married filing jointly is $12,700, same as qualified widow. Married filing separately is same as single, and then head of household is $9,350, kind of in the middle. So that's where that head of household filing status could come in handy for people. They get a little bit higher standard deduction. The next thing I want to talk about is exemptions. So we have our standard deduction that we subtract from our adjusted gross income, and then we subtract out our exemptions, and we get one exemption per person in our household. So one for the taxpayer and the taxpayer's spouse if you're married, and then one for each of your dependents, and they have to be qualified dependents. The next video we're going to talk about qualified dependents, so qualified children and qualified relatives. So if people meet all of the tests to be a qualified dependent, then you get an exemption for them. So $4,050 for 2017. I was thinking that it was going to go up this year. That's the same as it was last year. $4,050. So we subtract that exemption. So if you have a household of 5, you'd get 5 exemptions: taxpayer, taxpayer spouse, and 3 kids who qualify as dependents. So you get 5 exemptions. So that's over $20,000. That's what, $22,500. Now the new that $22,500 is in addition to your standard deduction or your itemized deductions. So those are things that reduce our income to get to taxable income. What has happened with this new tax law is that they've very much increased the standard deduction. Our standard deduction for single is $6,350. In 2018, the standard deduction will be $12,000. Married filing jointly goes from $12,700 in 2017 to $24,000 in 2018. The only difference is, and that sounds like it's really cool, and it is for people who either don't itemize or who don't have dependents. One thing that's happening is that the exemptions are going away. So in doing that, I'm personally a little upset because now they're increasing my taxable income by $20,000 because my itemized deductions were already at the level of the standard deduction anyway. So that change did nothing for me. But taking away the exemptions actually really hurts. So an additional $20,000 in income is a really big deal. So this might be good for some people, might not be so good for other people. So I will try really hard to stay positive about this change and just teach you what the laws are, because that's what you need to know, is what the laws. You don't really care what I think, and I personally don't care what most other people think. And so we're going to stay away from the political realm here and just talk about what the laws are. And yeah, the laws have a negative effect on me, but they might have a really positive effect on other people, and I'm trying to keep an open mind with that. So that covers our standard deduction and itemized deductions. Our next video, we will move on to dependency.